Hello everyone, before we dive into today's topic, a quick reminder that this content is not financial advice, and we strongly encourage you to do your own research. Today we're going to delve into an intriguing comparison: dividends versus crypto rewards. We'll briefly discuss what dividends are, traditional profit-sharing mechanisms in the world of investment. Then we'll shift gears to crypto rewards, a relatively new player in the world of digital assets. So buckle up as we explore the world of dividends and crypto rewards. First, let's understand what dividends really mean in the world of finance. So, dividends. What are they, you might ask? Well, in the simplest of terms, dividends are a slice of a company's profits that are shared out to its shareholders. Think of it as a thank you gift from the company for your trust in their business. It's a way for companies to give back directly to those who have invested in their success. Now, how do they work? Picture this. You own shares in a company, let's say, a tech giant. This company has had a profitable year, and they decide to share a portion of these gains with their shareholders. This portion is what we call a dividend. Dividends are typically paid out in cash, sent directly to your brokerage account. But that's not the only way. Some companies offer the option of reinvesting dividends back into the company by purchasing more shares. This is known as a dividend reinvestment plan, or DRIP. It's like a snowball effect. Your investment keeps growing as you continue to reinvest your dividends. But here's the thing, not all companies pay dividends. It's not mandatory. It's a decision made by the company's board of directors. Some companies might choose to reinvest their profits back into the business for growth, rather than distribute it to shareholders. Also, it's important to know that dividends are not a guarantee. They can fluctuate based on the company's performance and profitability. If a company has a bad year, the board might decide to reduce or even skip the dividend payment. One last thing to note is the frequency of dividend payments. While most companies in the United States pay dividends quarterly, some may pay them annually, semi-annually, or even monthly. Now that we have a basic understanding of dividends, let's move on to crypto rewards. Now, onto the exciting world of cryptocurrency and the concept of crypto rewards. Just as dividends are a share of profits given to stockholders, crypto rewards are incentives given to cryptocurrency users for participating in various activities. The beautiful thing about the world of cryptocurrency is that it's not just about buying low and selling high. There's a whole ecosystem of activities that users can engage in to earn these rewards. Let's start with mining. Mining is the process of validating transactions on a blockchain network. Miners use their computing power to solve complex mathematical problems, and when they do, they're rewarded with a certain amount of cryptocurrency. It's a bit like being a gold miner, except instead of digging in the earth, you're digging through complex algorithms. Staking is another way to earn crypto rewards. In proof-of-stake blockchains, users can stake their crypto, that is, hold it in a wallet to support the network's operations. In return, they receive rewards in the form of additional tokens. It's similar to earning interest on a savings account, except in this case, the interest comes in the form of more cryptocurrency. Another common way to earn crypto rewards is through liquidity provision. In decentralized finance platforms, users can supply their tokens to liquidity pools. These pools are used to facilitate transactions on the network, and in return, the users earn a share of the transaction fees as rewards. And then there are airdrops and yield farming, two more ways to earn crypto rewards. Airdrops are essentially free tokens given out by crypto projects to their community, while yield farming involves lending out your crypto to earn interest. So, you see, in the world of cryptocurrency, there are numerous ways to earn rewards. It's a dynamic and engaging space where the opportunities for earning are as diverse as the cryptocurrencies themselves. With a grasp of what crypto rewards are, let's now look at how they compare with dividends. Now comes the interesting part, comparing dividends and crypto rewards. Let's dive into the similarities and differences between these two forms of returns. Both dividends and crypto rewards act as incentives for investors, but they differ significantly in their structures, risks, and potentials. First off, let's tackle the similarities. Dividends and crypto rewards both serve as a return on an investment. In the case of dividends, when you purchase shares of a company, you are buying a piece of that company. As the company profits, you receive a portion of those profits in the form of dividends. It's a way for the company to say, "Thank you for believing in us." In the crypto world, the concept is similar, but the process is a little different. When you stake your crypto, you are basically locking up your tokens in a wallet to support the operations of a blockchain network. In return, you get rewarded with more tokens. This is akin to earning interest on your crypto holdings, a thank you from the blockchain network for your support. But while the underlying principle is the same, dividends and crypto rewards are different beasts when it comes to their structures. Dividends are usually paid out on a fixed schedule, often quarterly, semi-annually, or annually, and the amount is decided by the company's board of directors based on its profits. Crypto rewards, on the other hand, can be much more unpredictable. They depend on various factors like the network's protocol, the amount of crypto you've staked, and the total amount of crypto staked in the network. Now let's talk about risks and potentials. With dividends, the main risk lies in the company's performance. If the company doesn't make a profit, there's a good chance you won't get a dividend. But with an established company, dividends can provide a steady income stream. Crypto rewards, however, are a whole different ballgame. The crypto market is known for its volatility, which means the value of your rewards can fluctuate greatly. One day, you might be raking in profits. The next, you could be nursing losses. But then again, the potential for high returns is also much greater with crypto rewards. It's a classic case of high risk, high reward. In conclusion, dividends and crypto rewards each serve as a form of return for investors, but they are fundamentally different in their structure, risks, and potentials. Dividends offer a more predictable and steady income, while crypto rewards provide the potential for higher, albeit more volatile, returns. As we can see, dividends and crypto rewards each have their unique attributes. Let's recap what we've learned today about dividends and crypto rewards. We dove deep into the world of dividends, understanding them as payments made by a corporation to its shareholders, usually in the form of cash or additional shares. They represent a portion of the corporate earnings and are a way for companies to distribute revenue back to their investors. We also explored crypto rewards, a newer form of return on investment that's gained traction in the digital age. Crypto rewards are incentives given to holders of certain cryptocurrencies for participating in network activities, such as staking, mining, or simply holding the cryptocurrency in a wallet. These rewards can come in the form of additional cryptocurrency tokens, and they provide a way for crypto enthusiasts to earn passive income. When comparing the two, we noted that both dividends and crypto rewards serve as methods to earn income from your investments. However, the two have distinct differences. Dividends are more predictable and are typically based on a company's performance and profitability, whereas crypto rewards can be more volatile, reflecting the dynamic nature of the crypto market. Yet it's important to remember that both dividends and crypto rewards come with their own set of risks. The value of a company's stocks may decrease, affecting the amount of dividends received. On the other hand, the volatile nature of cryptocurrencies could mean that the value of your crypto rewards can fluctuate significantly. This is why we emphasize the importance of personal research before making any investment. Understanding the market trends, the performance of the specific company or cryptocurrency, and your own risk tolerance are crucial steps before diving into any form of investment. It's also worth consulting with a financial advisor to help guide your decision-making process. In the end, whether you choose to invest in dividend-paying stocks or crypto rewards depends on your investment goals, risk tolerance, and personal interest in traditional or emerging markets. It's all about finding what works best for you and aligning your investments with your financial goals. So there you have it. A comparison between dividends and crypto rewards, two different routes to earning from your investments. Remember, knowledge is power, and the more informed you are, the better decisions you can make for your financial future. Thank you for watching. Don't forget to like, comment, and subscribe, and hit the bell notifications for updates anytime we upload a new video.